This is Jeffrey Tucker, Brownstone Institute. It's my pleasure today to have Brian Blase of Paragon Institute here to talk to us about the wild, woolly world of medical health insurance. And most parts of the world believes that the U.S. has this sort of free market system. Everything's private, and Americans are all responsible for their own health care, and we use a free enterprise model to deliver healthcare. If you're in the U.S., you know that that cannot be true. I mean, hardly any of the prices are market prices. The bureaucracy is thick and appalling, and for some strange reason, tracing to a historical artifact, vast numbers of Americans rely on their health insurance and medical insurance coming through business as the provider. The deeper history of this is this entire system traces to wartime price controls in the middle of World War II. The wage controls were so strict in light of the experience of the Great Depression that companies found other ways to pay their employees besides salaries and wages, and one of those was to provide medical coverage for them. After the war, this system stuck and then eventually got rolled out to the general population. And now every business in America that gets more than 50 employees is required by law to provide medical insurance to its employees, which turns out to have become, in light of changes over the last decade, enormously expensive. And I've seen some estimates that suggests that hiring a new employee is already going to cause a company to be $28,000 deep before they've paid anything out in salaries or wages for this new employee, and this has throttled the job market. And it's throttled it in two ways. One is to make it so expensive to hire new employees, and the second one is to discourage employees from ever leaving a job because they don't want to lose their health coverage. So they suffer much longer in jobs they hate and just cling to them for dear life. And that has contributed to the current labor market, which is typically described these days as a no hire, no fire environment. So everybody's just hanging on for dear life. And a major factor here is health insurance. Well, the Paragon Institute specializes in this topic and the medical system in general. And I'm grateful to have discovered it because it's strange. There was a time back under the Clinton administration and then in the Obama years where everybody imagined themselves to be experts in healthcare services and the medical system generally. Those seem to have sort of gone by the wayside. It's hard to find people who even know anything about it because the whole system is so complicated and confusing, and the experience of every individual is so diverse that it's a full-time specialty even to be able to talk about it with any level of coherence. Into this sort of empty market of experts in healthcare stepped the Paragon Institute with the sole focus on this topic. And I'm pleased to talk to Brian Blase today about this topic and more. So welcome to you, Brian.
It's great to be with you, Jeffrey. Thank you for having me on.
What's your general sense of my initial framing of the problem?
I thought it was very well said. You made several key points that I often make. One is that we do not have a free market in healthcare. We have a market that is distorted on both the supply side and the demand side by government policies. On the supply side, government restricts providers' ability to practice to the top of their license. It prevents competition. It really protects incumbents from normal disruptive market forces that you really need to have in a dynamic economic sector. And then government screws up the demand side as well with policies that inflate demand. The second point that you made that I really like is that the history of employer-sponsored insurance really started with wage and price controls in World War II. And whenever you see a wage or price control, the first thing to ask is how are economic actors going to try to get around it? And if you cap wage growth, you have normal economic forces where you still need to compensate employees. So you look for other ways to compensate them. And employers did that by offering medical insurance. And then the IRS in the 1950s decided that that would be a tax-free benefit. So the tax code has a bias in favor of employers providing health benefits versus wages. And it's important for people to know that that is not a gift from the employer. That is a form of their compensation that is in the form of a healthcare benefit. And it's a pretty inefficient way to provide and finance healthcare. And so I think your introduction was great. Paragon, we've been around for about 4.5 years. And really, there is an absence on the free market policy community of expertise in health policy. And I think your diagnosis of why is a good one. It's the one I use, is that it's also complicated. And so when I work with conservative free market Republicans, they'll often say, well, healthcare is too complicated. We just want to move towards free market healthcare. But government has so messed up the market that it's sort of complicated to get your head around. So most of these free market policy experts, they go into energy deregulation, tax policy, budget process reform. And what we really need is more free market work on the health sector, because that is the main area of rising expenses for America's middle class families. It's the number one source of anxiety for Americans. And if you look at the federal and state budgets, it's the top line item, and it is the line item that is growing the most unsustainably.
Yeah, all that sounds right. Just as a side note, and I can't wait to plunge into all this stuff, but it suddenly occurred to me as I was recounting this history how strange it is that in World War II, we had a focus on restraining price increases, whereas a decade earlier, there was an effort to raise prices and wages of everything, under the belief that it was deflation, that falling wages and prices were causing the depression. And so we can get out of the depression by raising wages. So now it comes World War II and they want to go up. And now we've got the government doing the opposite thing. It's a little bit of a puzzle there.
Yeah, well, the government experts are, they're often wrong.
Yeah. Now, so Paragon talks about this stuff and specializes in it. I'm not sure where we want to begin, but tell me if I'm right that you're seeing a growing attempt to flee conventional healthcare, by which I think I mean, or healthcare insurance, by which I mean Obamacare, in favor of these crowdsourced services that are operated on a very different level. Does that sound right to you? Insofar as people can do that, they are doing that?
I mean, I think you see the growth of financing alternatives, health sharing ministries, where you're outside of a typical insurance model and there's more sharing of members' expenses. But the growth of those alternatives is slow. And really, my sense of why it's so slow is because the government has put such an advantage in the traditional model of health insurance. I mean, Obamacare had two main coverage expansions. One of the coverage expansions was significantly increasing the Medicaid program, which was historically a welfare program for the most vulnerable members of society, so low-income children, people with disabilities, pregnant moms. They expanded it to all able-bodied working-age adults below a certain income level. But the key focus of President Obama was not Medicaid expansion. It was what he thought would be these very competitive marketplaces for health insurance. And it was a very complicated structure, right? Because they had all of these price controls, which made the insurance very unattractive for young, healthy individuals. So in order to get them into the market, they created a tax penalty called the individual mandate for people who didn't buy the government-approved coverage, and then a system of subsidies to get people into the market. Well, it turns out the individual mandate was really ineffective. The penalty size was too small to get people to buy a very overpriced insurance product. Congress, fortunately, repealed that tax penalty, and it had very little effect in the market. The market was less than half of what was expected because the plans were expensive, high premiums, high deductibles. They didn't really cover the best doctors and providers in areas. But what happened when the Democrats had control under the Biden presidency, they significantly expanded the Obamacare subsidies, initially as a COVID measure, and then they expanded them through 2025. That did lead to a significant increase in the number of enrollees in Obamacare, including huge problem of phantom enrollees, people that were signed up without their knowledge or consent because of the financial gains that could accrue to insurers and enrollment intermediaries from enrolling people. So the government, because it has poured so much taxpayer money on the Obamacare structure, and because you mentioned, employers with more than 50 workers, they face a tax penalty if they don't offer medical insurance. We're seeing a move towards alternatives, but it's much slower than I think we need in order to break through this medical industrial financing complex.
Well, I'm not sure how we should structure this because I'm concerned that I don't want readers to just think this is a flurry of confusion. Like, we don't want to be in this conversation as confusing as the care system is itself. So let's start with these defined benefits packages, because I think, am I right, that there are low premium, high deductible plans available that for just catastrophic coverage for people under 30. Am I correct about that?
So within Obamacare, there are several types of plans, and one of them are catastrophic plans. And Obamacare only made them available to individuals below the age of 30.
And are those much more affordable?
Well, they still have to comply with all of the Obamacare regulations and pricing restrictions. So are they much more affordable? I would say they are not much more affordable. They are lower premium. They are higher deductible. The Trump administration did guidance last year that opened them up to individuals over the age of 30. And it's now in the middle of rulemaking to make that change permanent. So I think it's a good policy change. I'm supportive of it. They're also trying to link it to long-term health insurance plans, which we could talk about the benefits of long-term health insurance plans. But the problem with the catastrophic plans is that you still need to comply with all of the Obamacare regulations.
Among which, for example, I looked it up. Among which is that it still pays for what's called wellness care or continued preventive. That's what preventive care, right? So if you don't want preventative care, and you just want a package that will pay you if you get in a skiing accident or fall off your balcony or something like that, there's no such package available. Is that correct?
That's right. So all the Obamacare plans need to comply with what's called the essential health benefits. And on top of that, they need to cover preventive services without cost sharing. And that raises prices. But the main reason that Obamacare plans are expensive are because of the guaranteed issue community rating provisions. That means insurers have to offer coverage to every single applicant, regardless of the health status of the applicant, and they can't charge sicker people more expensive, higher premiums than healthier people.
Or another way to put that is that there's no reward for getting healthy.
There's no reward for being healthy in terms of getting discounts on your health insurance. Yes.
Okay, so we have now covered the issue of the defined benefits plans, and I do want to just say, and I think your words tend to have a lot of weight, so I don't need you to comment on this, but my strong impression from these preventative care uh, uh, benefits, so-called, is that it's basically a sales funnel for pharmaceutical products and diagnostics that allow the um, that is essential for the medical industry to keep you sort of hooked into it. And so, this preventative care thing, it strikes me that it should be completely optional. Like there should be a little button you could just uncheck it. No, I'll take care of myself. That's something like that.
Yeah, I mean, economic studies show that one theory of preventive services is that they prevent conditions from developing later in life to be more expensive, and they save money overall. That's generally not true. There are some preventive services where that's true for, but in order to get in order to do so much preventive care, right, there's a lot of costs incurred to do tests and diagnostics for things that people, overwhelming degree, are not going to get, and is not going to be a serious issue for them. So I'm not, casting doubt on preventive health services, but I agree with you that should be up to the individual, the type of preventive services that they want their plan to cover. And we should also have like some innovation on the health insurance plan side. Like if there are like really good preventive services that are cost effective and that there's technology that's able to come in and lower the cost, well, then that makes a lot of sense for plans to cover, or for people that have certain conditions to cover it for them. But one of the problems with the way that we've constructed health insurance is that we have blanket rules that apply to everybody, and they reduce cost sensitivity to the individual, which means overall, everyone's paying more to support the health insurance structure.
Right. So that's so just freeing the insurers from these kind of mandates of these defined packages of what they have to offer, and allowing an open competitive environment so for people to pick the kind of benefits that they're willing to pay for, and face a, a calculation on their own based on their own health would be a step in the right direction.
Absolutely. There is a market too. So we talked about the ACA catastrophic plans. There is a market that is not subject, or a type of plan that is not subject to any of Obamacare's rules and regulations. They're called short-term limited duration health insurance products. So I came to learn of these in 2017 when I was working in the White House, and we were trying to develop options for individuals that have been harmed by Obamacare. And so we did these plans have been around for decades. The Obama administration restricted them because they were an alternative, and they were afraid that young, healthy people were going to go into this market and not come into the ACA market, where they needed their enrollment for all the cross-subsidy schemes that are the feature of Obamacare. So we opened up those plans so people could have them for a period of up to 3 years. My family was enrolled in one of those plans. We moved to Florida. The network was broader than the Obamacare plan network, meaning that more doctors and hospitals accepted it. The deductible was about the same, and the premium was a third the price of the Obamacare plan premium. So it was a no-brainer for my family to enroll in one of these products. Unfortunately, the Biden administration restricted them once again. And we are waiting on the Trump administration to open them back up. I think that's a regulatory action that they're likely to take within the next 6 to 12 months.
That sounds great. As long as people can easily find them and rush in, that would just be a real emancipation. So that's fantastic.
And
Great,
they are
great to hear
subject
that.
to state regulation. So they're exempt from federal regulation, which is why Obamacare doesn't apply to them. They are subject to state regulation, and states have taken different approaches. But in most states, probably in 2/3 of states, you were able to buy these plans for up to 36 months.
Okay, that's glorious. All right. Let's hop over to the issue of risk and premiums and risk assessment. Normally, in insurance, for example, you buy life insurance, they're going to be all over you about your individual health. I remember first time I bought life insurance, they wanted to know if I was a smoker, and I said yes. And they said, okay, well, now your premiums are going to be like twice as much. So I said, well, hold on a minute. So I quit smoking. I just quit. And I waited 6 months or whatever, and bought life insurance at half what I was going to pay before. So, in many ways, I credit the market for getting me to do what I should have done anyway. I was just like the prospect of pain when you suddenly realize every pack of cigarettes is costing you like twice what you're actually paying for it. In what you're paying in insurance, that focuses the mind, and you suddenly lose your weird addictions that you think you can't give up. And in car insurance, right? If you're a reckless driver, you're going to be and have caused accidents or gotten tickets, you're going to pay a higher interest because the actuaries get to benefit, get to work on you personally. Same thing with home insurance. If your home is in an area that's where there's floods and fires and you're not locking your door and you do bad things, then your insurance is going to be much higher. So it doesn't make any sense to use the word insurance that's not calibrated according to the risks of the particular situation. But in health and medical so-called insurance is completely different. The risk pools are gigantic, and the actuaries, whose job it is, and I adore these people. They're the biggest nerds on the planet Earth, actuaries. It's a great profession. They don't love you or hate you. They're just assessing the risk of the particulars. The actuaries, in the case of medical insurance, are busy assessing large risk pools instead of individuals, and that's a result of Obamacare, as I understand it. If I've characterized the problem correctly, then what we have here is a situation where there's no particular benefit to anybody for getting healthy. It's not going to change anything about your premiums, and as a result, you're going to have a less healthy population than you might otherwise would.
Yeah, so that's called moral hazard, and that's a real problem. So several things. I love what you just said. You'll be interested to know that I almost became an actuary. I studied math with an actuarial option and came very close on a couple of occasions to becoming an actuary. I decided to go the economics route instead. But you're absolutely right. I mean, if you take one of the introductory courses in actuarial science, like the number one principle that you learn is that for an insurance market to work well, the premium should match the risk. And if the premium does not match the risk, then you have a whole bunch of problems related to underinsurance and overinsurance. So in healthcare, and because of Obamacare, we've broken the link between premium and risk, which is why you need all of these cross subsidies. And what I mean by cross subsidies is that if you charge two people of the same age, the same premium, and one of them is very healthy and one of them is very sick, and you force their premium to be the same, The person who's sick is like, great, this is a great deal for me. I'm going to buy that insurance. The person who's healthy is like, this is a terrible deal for me. I'm not going to purchase that insurance. And when that dynamic happens, you get the unraveling of the insurance market. It's called an adverse selection spiral. So what you have to do is figure out a way to get these young and healthy people to overpay for insurance. And what we have done is say, okay, it's going to be the taxpayer that's going to overpay, because we're going to have the taxpayer finance like 80 to 90% of the premium to get these people into the insurance market. So rather than like having a sensible structure where we price appropriately, and if there is a government subsidy, we would target it just to the individuals that most need the assistance. We create a system of cross subsidies, which is really inefficient. And you raise another good point, is that we are discouraging people from engaging in good health behaviors, going to exercise, eating well. I mean, we know there's a lot of stuff that matters for Americans' health much more than the type of health insurance card that you have in your wallet. And if we force a major financial product to charge the same rate regardless of health status, then yeah, we are decreasing American health on the margin. And that's another problem. Again, this is a price control. It's another problem when you have price controls, is you just lead to sort of all these, some of them anticipated, some of them unanticipated, negative consequences.
Here's another thing, Brian, that's occurred to me. That's something strange about the system as it currently stands. We live in a kind of information chaos concerning health, and this has gone on for as long as I can remember. Like the claims and cross claims about what makes you healthy, what makes you unhealthy, what you should eat, what you shouldn't eat, how much exercise you need, how much you don't, are all over the place. I mean, you could spend the rest of your life reading Substacks and listening to podcasts and fill your library up with books about what's the right path to health, and there's no mechanism available to really show you what the truth is. That's why you can't hold dinner parties anymore, because people come over. It's like, I'm sorry, I won't eat bread. Oh yeah, well, I won't eat chicken. Well, I'm not going to eat I'm not going to eat beef, and so on. So it's kind of shattered even our social relations because of this information chaos. But actuaries go about things differently. They don't actually care about the morality or causality involved in a particular thing. They just happen to notice, for example, that a home without fire extinguishers or sprinkler systems are more likely to burn down, right? And so they're going to pay a higher premium, and you're rewarded if you keep fire extinguishers around and install a sprinkler system with lower premiums. So it gives you a guide. In other words, the actuaries give you a guide to action, which is glorious. So if you had actuaries involved actually in assessing your health, we might be able to find out more, like empirically. Is a vegan diet better than paleo? And how many hours a week should you exercise? How much time should you spend at the gym, and so on? How much wine can I drink without diminishing my health? We would find out things we don't currently know just through the price system. Am I thinking correctly about this?
I think you're absolutely correctly. I mean, we want to minimize bad outcomes. And one of the ways to do that is there's a whole bunch of risks out there, and people have different preferences around risk, but we should price the risk. And if you, it doesn't make any sense if you said to an individual, you have two drivers, one of them gets into accidents every other month, the other driver hasn't had an accident in decades, that those two drivers should have to pay the same car insurance premiums. That doesn't make any sense. And I just think as we get into healthcare, people have viewed things, some people have just viewed things differently. And they have this view that everybody should have to pay the same premium. And the problem is that obviously leads to the adverse selection pressure and the need for all of this government spending to stabilize the insurance market. But to your point, we are mispricing important behaviors and actions, and we want people to be healthier. So we should be incentivizing them to healthy behavior by rewarding them
Yeah.
with lower prices for their health insurance coverage.
So you would have actual empirical evidence. For example, right now we have this "Make America Healthy Again" movement, and RFK and all of his all these influencers are saying, "Oh, we should flip the pyramid upside down. You need to stop drinking orange sodas and have something else. We need to give up the Doritos, highly processed food." But maybe every bit of it is true, but we don't have any real mechanisms in place that can provide like hardcore, in your face empirical evidence. Every cocktail I drink is costing me such and such more in my health insurance because the actuaries say that this is true. Or maybe I'll forego this Doritos bag and eat carrots instead because that will reduce the price, because clearly the actuaries have said that Doritos constitute risky behavior, right? We would just know more about our health if we had correctly priced health insurance.
Yeah, I think that's right. And there's some things that actuaries are going to be able to see and things that people do that they're not going to be able to see. But in general, actuaries have done a really terrific job in figuring out how to price risk throughout other types of insurance where we allow that type of variation in pricing.
So you get the actuaries to work correctly pricing individual risk. So what, to your mind, should we do about this problem of what's called pre-existing conditions? Because you take people out of the community risk pool and price healthy people in a certain way that it could, in fact, especially if you had catastrophic plans, cause the premiums to collapse and the job market's to unfreeze and everybody's happy, except for the people that are now facing very high premiums, especially because the risk pool has been, the healthy people have been taken out of the risk pool. What, to your mind, is the way to address this? And by the way, before you answer that, I would say the Obama era moral injunctions concerning pre-existing conditions was one of the most effective pieces of rhetoric in the history of medicine. Like, you can't even hardly talk about this issue anymore. I get the sense that there's some sort of taboo that no matter whatever else we do, we can never discriminate against people with pre-existing conditions.
Yeah. So great question. Couple of reactions. One, they significantly exaggerated the problem of pre-existing conditions, meaning the problem is people have medical conditions that preclude them from being able to get health insurance. And they said that was a massive percentage of the population. It turns out it's only a few million individuals that had a serious health condition who were unable to get health insurance. And one of the best pieces of evidence for that is that they opened up, before Obamacare's key provisions took effect, they opened up a pre-existing condition pool, and they got a very small, and this was like incredibly heavily subsidized. They got a very small percentage of people to buy in. Less than 1 million people bought in. Second thing, what was the market doing on this before the government came in with regulations? The market was innovating here. What the market innovation was, it was to have a separate type of product. So you would have your health insurance product. You would also be able to buy another product, which was just a guarantee that in the future, you could access health insurance without going through medical underwriting. So United Healthcare was offering what we term as renewal guarantees. So you would pay an extra premium, but that premium would guarantee you that if you had a medical condition in the future, you would be able to get insurance at a standard price without having your health status factored in. Third thing that was happening here, so you're going to have some level of subsidies. There's going to be people who can't get health insurance, who the American taxpayer, and I think American taxpayers are very generous, are going to support. What states had in place was something called high-risk pools. The best functioning high-risk pools would be, first, individuals would have to apply to insurance, and they wouldn't get an offer of insurance from any of the carriers selling in that market. If that happened,
give an example of what a malady would be, for example.
So somebody who has cancer, right? They are uninsured, they have cancer, they apply to, like leukemia, they apply to get coverage. Insurer's going to be like, this isn't insurable. You're coming to us with something that is really expensive, and we know we're going to bear upfront costs for. So you're trying to get insurance after the insurable event has actually happened. You know, the analogy would be like you buy homeowners insurance after your house burns down. So those individuals, you would then be able to access state high risk pools. You would have to pay a premium for it, right? It wouldn't be at the normal price, but it wasn't at something that was outrageously expensive. It might have been like a 50% premium increase. And you need something like that in order to discourage individuals from waiting until they need health insurance to actually buy the health insurance plan. But that, to me, and then you could have the government determines what the subsidies are. It could set the rules for that program. I think you're going to have, you'd have 50 states doing somewhat different approaches. And we had, I'd say, many of the state high risk pools before Obamacare were well functioning. I think rather than what Obamacare did, it would have been a much better solution to just increase funding for those state high risk pools without, the Obamacare tax regulatory subsidy structure that has so distorted the premium risk equalization.
That is absolutely, Brian. I tell you what, this makes this whole interview worth it just to hear you talk about this. I had no idea that there's a wild exaggeration about just how many people are uninsurable, because that was, I think, the whole basis for this elimination of actuarial science on individual health and the application of this broad community risk pools, which is a main driver for the premium increase and the wild deductibles and the whole chaos in the market. So you're saying that it was just wildly exaggerated, and we already had mechanisms in place for dealing with high risk individuals at the state level. And you're also saying that if the federal government wanted to add subsidies to that, that's a much better path than just massively overcharging everybody and eliminating basic insurance logic for all individuals. And that we could. So one of the problems, though, I think, is that since Obamacare, am I right that we've become a far less healthy society since Obamacare passed, right? I mean, we have more pre-existing conditions than ever before because we've lost this incentive and financial incentive, and therefore the will to health.
So Obamacare took effect in 2014, its key provisions. We had 3 straight years of decline in American life expectancy when Obamacare took effect. So 2014 through 2017. That was the first 3-year decline in life expectancy since the Spanish flu, which was a century before. Now, part of what Obamacare, when it launched, it was associated with the rise in the opioid epidemic. but partly, and there's some controversy in the literature here, but states that adopted Obamacare's Medicaid expansion had much more severe experiences with the opioid epidemic than states that turned down Obamacare's Medicaid expansion. And the Medicaid expansion was one way to finance prescription use of opioids and really put it on steroids. So Sam Quinones, in his book on the opioid crisis, talked about the Medicaid card as being a gateway for individuals to get addicted to opioids and to be able to buy them in bulk. So, I mean, I think there are other features that come with significantly increasing, the government healthcare programs that work against American health.
That is just absolutely remarkable to think that. So, you don't see this as big a conundrum as I might have thought, that we actually have the mechanisms in place to deal with this right now.
Well, I think we're in a conundrum because the best chance that Republicans had to deal with Obamacare's problems, well, the first best chance was the 2012 election. And in 2012, Republicans nominated Mitt Romney, who was probably the worst possible candidate to articulate the case against Obamacare because of his role in Massachusetts, which included many of the elements that became part of Obamacare. And then in 2016, Republicans had unified control after those elections. And I think that was a real opportunity to develop a replacement and really a modification. I think now what we need to think about doing is Obamacare is going to be there. We should not over subsidize it. And there was a big debate in the fall over these extra COVID era subsidies on Obamacare. We shouldn't over subsidize that market because we need alternatives. But we should be focusing a lot of energy on what the alternatives are, so that the political message is Obamacare is going to be there. If you need Obamacare, it's there. But for people that it's not working well for,
you need a path out.
We have another mechanism.
Okay, let's talk about a third issue here, because we've covered the problem of sticky benefits plans, but the effective absence of catastrophic only care, which needs to be fixed, and the problem of pricing individual health risk, which would create a mechanism and a means by which people can be rewarded for undertaking, better health, better life choices. So these are very important things. Now, what do you do about people that are in larger companies, more than 50 employees, that are stuck on their employer health plans? The employer wants to offload them. They want to be offloaded. Are there mechanisms that could increase choice by both the employee and the employer about how their healthcare medical dollars are spent?
Yeah, so let's start with an analogy in the retirement system. So retirement, employer-provided retirement benefits used to be a defined benefit pension plan. So you worked a certain amount of years, you qualified for a monthly payment from your pension plan through death. That transitioned to a defined contribution approach. The employer provided generally a match or a contribution that the worker took and developed their own investment strategy for. On health insurance, the vast majority of employers, so almost every employer over 50 offers insurance, and they pick the plan. They may, if larger employers, you may have an option of 2 or 3 plans, but so much has been outsourced to the employer. One problem with group plans, by the way, is that you have to think in terms of the larger the group, the more expansive the coverage is going to be and the more doctors and providers it's going to be, because the default is going to be to try to cover all the providers within the different regions where all the employees in the company live. So you have less sort of downward cost pressure by being able to have the individual say, no, I'm only interested in having that doctor or that hospital in my network, and can exert more price sensitivity there. The Trump administration, so this was one of the major rule changes that I worked on. We allowed employers to offer a contribution that workers could then take and buy a plan, an Obamacare compliant plan in the individual market. That rule took effect in 2020. So now, and this is how Paragon offers health insurance, we provide a reimbursement amount, which is basically the amount that Paragon will pay per month, and the workers, which varies based on age and number of dependents. So the older you are, the more you get, the more dependents, the more you get. But then you take this and you buy a plan in the individual market that best meets your preferences. And you can couple it with like an HSA. So the Paragon approach, our approach is we provide, it's called the Individual Coverage Health Reimbursement Arrangement, or ICHRA. We provide an ICHRA contribution, and if the worker selects a HSA qualified plan, Paragon will finance half of the HSA. Health savings accounts are really the best way for consumers to control the dollars because it's theirs, and any money that they save that they don't spend in a given year, it rolls over. So you have the best incentives to be cost conscious. There are problems with that rule. One of the problems is you can only buy an ACA compliant plan. There's some other limitations as well, but that is sort of the first major attempt to give employers a way to move away from the model where they select the health insurance for all their workers.
And it's called an ICHRA. 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 Now, and you think these would be, I'm guessing these are not very common. Am I right about that?
Correct.
Yeah. But they would be much more, people would take much more advantage of them if, with your ICHRA dollars, you could, for example, go out and just pay a monthly fee for an individual. What are they called? Like a doctor who's just
the direct primary care.
Direct primary care.
Yeah,
but you can't do that right now.
I mean, there should be. So I think a principle should be Americans should be able to spend their own money to finance healthcare the way that works best for them. And what fundamentally we need is people to be doing that so that the supply side of the market responds to individual preferences. So I think people should be able, and the employee, this again, it's not employer money, it's the individual's money, it's a form of their compensation. The reason employers will continue to do this is because I think two reasons. One, it's a significant tax benefit to the individual and to the employer. But also a lot of people expect their employer to provide them health insurance. We now have, I think, that general expectation. I mean, that's probably weakening a bit with the sort of the gig economy and contract workers. But still, the general expectation is your employer is going to provide you with health insurance. And this is just another way of providing health insurance, which again goes back to the model of the 401k, where the contribution goes to the individual and then they select how they want to invest that contribution.
Yeah, I think putting your employees on an ICHRA right now would be, it's not. I mean, there's some advantages, but not obvious ones, because you're forcing people into the Obamacare marketplace, and there's no and you have to somehow verify that to comply with the federal standards. Is that right?
Yeah, I mean, you can only take it to purchase a plan that is certified. It's called a qualified health plan that is
Yeah.
certified as a qualified health plan. Now, we were somewhat limited in what we could do in the first regulation on that front. I expect like that. So first of all, I should say, like I mentioned, the short-term plans, and I worked on liberating short-term plans. The Biden administration restricted those plans. A lot of what I worked on in the Trump administration, the Biden administration has reversed. ICRAs, they did not reverse. And I think there is some bipartisan appeal in ICRAs for conservatives that want to move towards defined contribution health insurance, and for Democrats who this is a way to increase coverage and it's working within the ACA structure. I do think that one of the pieces of this that the Trump administration, if they do a second regulation on this front, that they're going to have to look at closely is how flexible can these arrangements be? And I mean, my advice to them is to make them as flexible as possible so that the dollars can go to where the employee and their family wants them to go.
Right. I mean, under ideal conditions, I think like an individual's working for a very large company. He declines conventional health insurance from the company as an individual, takes the money and goes and pays a direct primary care person just to be a consulting basis, prescriptions you need, that kind of thing. And then otherwise socks all the money away in an HSA, health savings account, that can earn a return in the markets and be used to purchase goods and services related to healthcare. That would be, I think, the ideal thing.
Yeah, and
but right now that's not legal.
I would couple that with true catastrophic insurance, because true catastrophic insurance is going to be pretty inexpensive.
Well, how much is that going to be? Tell me.
I mean, you have to look at the short-term plans, because that is the market that is not subject to the Obamacare regulations. But I think you're looking at a true catastrophic plan for like a reasonably
without
healthy
preventative care. Without preventative care.
Yeah, for somebody who's of like middle age and reasonably healthy, probably a couple $100 a month.
There you go. That's it. See, that's it. I looked this up on using Grok or whatever. That's exactly what Grok said. Like a couple $100 a month. Whereas right now people are paying more. The most oppressed people in this market right now are people that are not working for large corporations that are paying for elaborate. They are oppressed, but they just don't know it. But it's the people who are lawyers or independent contractors or independent businessmen or whatever who are having to go out in the marketplace and buy health insurance for a family of 5. You're going to be paying more than you were paying for your mortgage or your property taxes or anything else. It's unbelievable.
Oh yeah, I mean, so I told you I'm enrolled in an ICRA plan, and so we purchased Obamacare. And last year, we were with Florida Blue, and the annual premium was going to be $34,000 for a plan with a $13,000 deductible. So we literally would have had to have paid $47,000 last year before our plan paid for anything.
Yeah, right. I mean, how? And just to underscore the absurdity, and I can't even think of another analog that exists to this. But you're paying vast amounts of money, more than your mortgage. I mean, more than an elite private school would cost, before you've consumed any services, or maybe beyond just like a copay.
I mean, beyond the annual checkup, wellness check.
Yeah, beyond but as soon as you start actually using your so-called insurance, that's when you start paying.
We are so frustrated, like my wife and I. We are paying and so much for our coverage. And basically, it's just we only have it for catastrophic reasons. But because it's in the Obamacare regulatory structure, it's super expensive. And we like don't use it.
Yeah, it's unbelievable. It's just unbelievable. Well, this is why I was just suggesting that if once people size all the stuff up and you're healthy and you realize I don't really need these doctors unless something really goes wrong, right?
Yeah.
Um, the direct primary care option seems like the way to go, and many doctors would leave conventional large scale medical provision and just go independent if the direct primary care market had a greater degree of demand, right?
Yeah, which I think is one of the things we need to do is reverse a lot of incentives that lead doctors to be employees of hospital systems.
Okay, I I don't need to recount them now, but we've talked, I think, about four big areas, and I think with some degree of clarity, I hope. Let me ask you about a fifth area about which I'm very curious, mm, which concerns the way in which so much of health insurance, if I'm right about this, is somehow tied to your state. So I live in Connecticut, and um, I'm not sure exactly what the first of all, there's no requirement that anybody actually accept your health insurance. You could be, have great insurance and find nobody that accepts it. But the acceptance rate is higher within the state than it is over the border. Am I saying something that makes sense to you?
I mean, the state was the primary regulator of health insurance. And so this is like pre Obamacare. You saw some conservatives, probably a fair number of conservatives, say, well, we should let people buy insurance across state lines, which meant, if you were in Connecticut and Connecticut has, they mandate everything, health insurance has to cover everything. And there's another state, uh, Delaware, that health insurance, the mandates are much less restrict, that you could buy a plan in Connecticut that complies with the Delaware regulatory structure. There was more of an advantage to that. It didn't really ever take off, but Obamacare, by standardizing the demands of the what health insurance had to cover. Some states still go above and mandate more than Obamacare, but there's much more uniformity in health insurance regulation across the country now because of Obamacare.
Okay, so I think what you're saying is that you would resist a program that would mandate the insurers have their or that states accept insurance from other states because that would potentially make the market less free rather than more.
No, I think you should permit people to buy any type of health insurance that they want that could be regulated outside of the state. I just don't think you'd have that big of a market to materialize with this because of how standardized health insurance has become because of Obamacare.
There's nothing that can be
Michael
done.
Cannon, Michael Cannon at the Cato Institute, he's done work on that the U.S. States should allow their residents to purchase insurance that's regulated by U.S. territories, because U.S. territories don't need to comply with all of Obamacare. So if you would allow, I think it's the U.S. Virgin Islands, the regulations that they have there, and incorporate that. I've talked to other, policy experts that think that it's far reached to have a state say that you'll outsource your regulation to the U.S. Virgin Islands. But Michael Cannon has done a lot of work on that.
Yeah. Okay, that's really interesting. So you're in this awkward position, or maybe it's a great position, of being one of the few actual experts in this gigantic sector. How big is the American medical sector at this point? I mean, do you have a
I think we just
number?
eclipsed 18% of gross domestic product.
Okay, that's immense. So
Yeah, I
you're
mean,
one of the
compared to the other developed countries, they're probably generally around 10 to 12% of GDP on healthcare. So we're a lot more of our resources go to medical care and that
yeah.
complex
Oh,
than.
and speaking of which, sometimes I look at these GDP numbers when they come in, and it's like, oh, GDP is really up. Healthcare is leading consumption expenditures. I'm thinking, well, I'm not so sure.
It's
That-
it's probably, I mean, if you think in terms of the least productive areas of the economy and sectors, the education system is high on the list of inefficiency, and the American healthcare sector.
Okay, so you find yourself in this very interesting, and by the way, your erudition is notable, and I appreciate it, and your knowledge is vast, which is just great. I just love your
Thank
clarity of
you.
thought. But you find yourself in a position of having to make sort of elevator pitches for reforms, and so you're consulting a lot with Republican lawmakers and others. I mean, you're not a partisan group, so you're willing to work with anybody. Um, I've found in my discussions with people that on any subject, people want, a clean package of like, what are ways that we can fix this obviously broken system. Um, it, have you thought about, because we've talked about so many subjects today, have you thought about a clean, clear list of things that you want in the order of priority, and boiled them down to, let's say, 5 points? Can you do that for me so that you could take the existing system and make it more operationally effective for individuals and far less expensive, and normalize it into a real system that benefits the citizens? Do you have a clean list, like this is the first priority, this is the second priority, this is all the way 1 through 5? Do you have
Well,
that in your
that's
mind?
probably in that exact format like that. No, although that's a good challenge to put it like that. I would say most importantly, Americans need to control the dollars. So only less than 10% of what we spend on healthcare comes out of our own pocket. Most of it goes through a third party payer, a government bureaucracy, or an insurance company. So on the margin, we need to have patients controlling the spending. And the reason is because we need the supply side of the market, the payer side, the insurers, and the providers to be responding to the individual. So,
What is the
we,
mechanism that would do the most to achieve that goal?
I mean, expanding HSAs dramatically. Um, and again, I'll point to Michael Cannon here. He's got a paper on, or he's got forthcoming work on sort of this big HSA proposal that would take the employer sponsored exclusion, the tax exclusion, and eliminate that and create an equivalent, basically, size where the money is directly under the control of the individual. Now, we're not going to get there overnight. But I think on the margin, we have to move to individuals in control of the financing. And you've seen President Trump articulate this very well over the last several months with his message. We need to take the subsidies away from the health insurers and give them directly to the people.
But then they still go out into a marketplace that's not free, it's not competitive, that's highly that's overexpensive. So that would be your number two, would be to emancipate the insurers, to provide a greater range of product to
Yeah,
consumers.
absolutely. People need to be free to finance their health care the way that works best for them, and particularly when they're spending their own money. So all of these ways of financing healthcare that we've talked about are important. I do think that there's a common, and this is, we should have a separate podcast on this subject, but I do think there's a common view that hospitals are at loggerheads with insurers. I don't share that view. I sort of view them as colluding to inflate healthcare prices, that they both benefit when healthcare prices increase. And then obviously you have the whole supply side of the market. So we just talked about insurance coverage and more flexible insurance designs, and this model of catastrophic insurance and more first dollar pay for routine expenses. But there are so many perverse incentives from government policies that have led to consolidation on the supply side of the market. And we need to get rid of all of these government payment policies and rules that have made healthcare so complex and that have incentives for big consolidated systems.
So that's HSAs, more competitive packages from options, if I should say, for insurers, and then how does the pricing of individual risk fit into your prioritization list?
Well, that fits in with people should be able to spend their own money the way that they think works best for them, and they should be free to purchase products that are priced actuarially appropriate. I think that's essential to a reformed healthcare system. It's also, for the political reasons that we discussed, it is difficult. I would not mess with the Obamacare status quo per se in that regulatory structure. I really think that what we need is to build an alternative structure and then let them compete. And we'll even give the benefit, though there's so many subsidies advantaging Obamacare. We certainly should not have more subsidies, but allow this market where people spend their own money to be free.
Yeah. Okay. This is a great list. Is there anything you want to add to that, into the short list of priorities of reform over medical insurance? What I hear are three main points so far.
There's so much that government does to inflate commercial prices. So it does it through, I think, perverse Medicare and Medicaid policies. So we spend a lot of time. The healthcare sector is so huge. We spent most of our time talking about the ACA and employer provider insurance, but you've also got these behemoths, Medicare and Medicaid, and the way that they pay significantly affects and influences the structure of the healthcare sector. And a real problem is so many of our healthcare resources are allocated based off of political power, not based on the ability to serve patients. So there's 6 times as much money that goes into healthcare lobbying that goes into lobbying for national defense issues. The federal government just controls so much of the resource allocation. The Medicare program sets prices that percolate throughout the entire healthcare sector. They determine what gets reimbursed and at what reimbursement rates. So we need to fundamentally take power out of Washington and out of that sort of centralized control system.
Do you think you must have fantasies about this? I certainly do. Suddenly the Republicans get a backbone, the lobbyists are beaten back. There's a perfect bill that could be passed. A comprehensive bill that would actually revolutionize this entire sector to the benefit of everyone. Do you have in your own mind a model piece of legislation that looked like that, or is that just too pie in the sky utopian?
I don't have a model legislation like that right now. I think that we need to know where we're going, and where we're going is where patients control the money and where the resources are allocated not by political power, but by best serving patients. And so what Paragon does is, so we're motivated by those principles, and we put together a list of policy reforms. We try to push the bounds of what's politically feasible, but we also are we need wins. So we need to stop moving in the wrong direction of more government power and centralization and start pushing back and moving policy in the other direction.
Yeah, I noticed this from, I think, the Big Beautiful Bill, I think as it was called, had some improvements in things like, I'm learning this language now, the ISCRA? Yeah, ICRA had an improvement there. There was some broadening of HSAs so that now you can have HSA under a direct primary care, I think, and some other little marginal reforms like that that seem to take us in the right direction. So you find that, but they would seem to be buried, right? I mean, so you find that this sort of marginal improve it here, improve it there is probably going to be more politically successful than an all at once. Oh, let's change the entire system.
You
According to
mean generally we're moving in a marginally better direction or a marginally worse direction? So I want us to move in a marginally better direction.
Yeah. And what's your as a final comment? What's your general sense of Trump RX?
Oh man. So I think Trump RX is good. I think it is makes a lot of sense for people that don't have health insurance as a way to get lower prices. I am generally supportive of what the president is doing on drug pricing. And I think it is a real problem that Americans pay so much more for pharmaceuticals than people do in other countries. At Paragon, we've tried to separate this in a retrospective versus prospective approach. We think there's concerns with just changing pricing for products that are already on the market where the pharmaceutical companies are banking on revenues. But I think moving forward, changing the structure so that they have incentives, meaning the pharmaceutical companies, not to overcharge Americans and undercharge people in other countries, knowing that they can't do that anymore. And if they undercut Americans, I'm sorry, if they charge Americans so much more, then and they go into other countries with lower prices, the American price point is going to decline.
You know, I was disappointed when I saw, I think venues like the Wall Street Journal saying that this constituted price controls. That doesn't strike me as true at all.
Yeah, I think on a retrospective basis, which is where I think the administration wants to go, this is about giving leverage to pharmaceutical companies so that we get to equal prices between the U.S. and other developed countries.
Yeah, the old Ricardian law of one price, right? Yeah. Brian, thank you for your work with Paragon. I hope everybody goes and uses your resources. You're the best source out there, which is why I wanted to bone up on this. There's another thing that I am going to be doing in a couple of weeks. I'm going to the Independent Medical Alliance, and they've asked me to give the keynote talk at the main Saturday dinner, which is absurd, but of course I'm not going to say no. And I wanted to cover this health insurance thing and check out all my knowledge. And anyway, I think you've taught me a lot, and I hope you've taught our viewers a lot. I hope everybody goes to the Paragon Institute. And what's the domain of that?
ParagonInstitute.org. And it'd be great to go there, sign up for our weekly newsletter. I send a newsletter out every Wednesday. So one just came out today. And you can follow me at Brian_Blase on Twitter.
Okay. Thank you so much, Brian. All the best.
Thank you, Jeffrey.